hired a lot of expensive, really smart engineers, built this amazing product.
How do you define product market fit?
We built it from scratch, scaled it. We had a 1 million in ARR within 2 years.
How do you figure out what to do next?
In my mind, those 4 or 5 companies would use this product, looking at the annual ARR of probably around like $300,000, $400,000, but that's it.
One quick question. What's the difference in startup environments?
We don't count our failures.
Is there not a model where you can grow at the pace you're growing and still be profitable?
You're going to an accelerator program and you meet your community of other founders pretty much at the same stage as you are, meet some mentors that you can learn from.
Hey guys, welcome back to Funds and Founders. Today we have on Ash. Ash has played various hats in his career, being a product manager, an account executive, and a lecturer. You were the founder and CEO of Alifants, which was a temp staffing company. And most recently, you're the co-founder of Wolf.xyz. And you guys just closed a seed round, a Series A round.
That's correct.
Congrats.
Thank you.
One thing I'd like to understand is, when would you say your entrepreneurship journey started?
Oof. That was long back, actually. We don't count our failures. No, I think I used to work for a big company. I was kind of a product manager.
Randstad?
No, it was education initiatives.
Okay.
Yeah, and I was working on an education product. We built it from scratch, scaled it. We had a 1 million in ARR within 2 years. So me and my friends, we felt really confident that we can do this for ourselves. And, we quit the job. We started our own company. Turned out we were quite wrong. Yeah.
Where was this?
This was in India.
Okay.
Yeah.
Why did it not work?
Well, I think if you work in a big company, there are a lot of resources and ecosystem that you have, a lot of mentorship from, executive team. And I think I took it for granted. I thought that it was just me that was making everything happen, and it wasn't the case. There was a whole team behind me. So I think when you start your own, you don't have anything, no expertise, no resources. You got to build everything from scratch. So it took me like about, I would say 3 to 4 years to figure those things out. Yeah.
If you had to take one thing away from that experience, what would you take away from it?
That building a company is hard. Yeah. I think working in a big company and doing something versus starting something from scratch, there are a whole different type of games to be played. And I think I'm realizing it more and more with every passing day. So there are people that are really good at coming in, they will see something and they will be like, I can optimize this process really well, right? I can streamline it, all that stuff. Then there are people that come in and they say, all right, if you do this thing, if you're running this process, and I can make it run faster at a higher velocity and help you grow and scale really fast. But there are very few people, and it's extremely difficult to stare at a blank canvas and start something. And you have this really good idea in your mind, but then when you start painting on that canvas, and it's all imperfections, and you can't make everything perfect because you don't have resources for that. So I think that kind of getting used to those kind of things took me 4 or 5 years. Yeah.
Going from that failed venture, what was the next thing you did?
So I think it didn't fail. We figured out that what we were doing was not legal.
Okay.
So we had to shut it down immediately.
Okay.
Yeah.
What do you do after that?
So the first one was about psychometric assessments, and turns out there are a lot of regulations around it. We didn't know that, and so we had to shut it down. After that, I started a kind of open source adaptive learning system.
Okay.
So the whole idea was that you could build and adapt, like textbooks are fixed. They give same instructions to everyone. But we have different level of understanding, each human being, and can we give instruction based on their own level of understanding? So I started a company called Tao Education, where we would take open source content, tag them, and build an adaptive learning system so it understands what a student know, what they don't know, and why they don't know something.
Okay.
And then give them the right instructions.
I feel like that's what a lot of folks are trying to do now with AI, and trying to build custom AI models, AI chatbots, custom paths, custom learning paths. What happened with the company?
failed.
Why?
That's a whole different lesson now here. I started by saying I want to make an impact in this world. I want to do something that's good for the planet, human being. But I was starting a business, and I missed the most important part, that who is buying it, and do they have money to buy this thing? And do they really desperately need this solution? Is there a pain point for which they want to buy this thing? And I think many things like, oh, it gets really hot in Austin, I'm going to help you solve that problem. How many people would pay how much money to solve that problem, and I think I didn't figure that out. So education, while the product was sounding great, had this open source component and all that stuff, how many schools are willing to pay for it? Not many. So it didn't go anywhere. Eventually, I gave it to a friend of mine. He runs a nonprofit in China. So he was implementing it in his institution.
Nice. So in other words, you couldn't find product market fit.
Yes, that's a nice way to put it, yes. Yeah.
Quick detour. How do you define product market fit?
Great question. Wrong person to ask. When I raised my last round, not this one, the previous one, I spent, I don't know, at least 1.5, 2 months, because I was like, okay, the goal with this round is to find product market fit.
Yeah.
My investors were like, you got to find product market fit. And I'm like, what the heck is product market fit? I know, I've read books. I read about it. I understand.
You know the theoretical
Exactly.
definition.
But what's the practical implication of it, right? How do you make it happen? And then I read some of the blog posts. I think one of the famous one is from Rahul from Superhuman, that if you ask your customer that I'll take this away from you, how disappointed he would be, right?
Yeah.
And I'm like, that's a good and not a great test, because like at early stages, our customer didn't like our product. They needed our product, but they hated using it, but it provided value that they could not get from outside. So I think I don't know right now still what's a product market fit.
One definition that I like, one is CPG, one is SaaS. But this one founder said, if you're able to sell an annual contract, and if the company renews without you having to overtly convince them, that is a definition of product. That's one that I've sort of liked the definition of, is when they come for the annual renewal without you having to overly sell them. Because the first time, great sales guy can sell someone on anything, right? But if they renew, that means you've solved a pain point at the right price point where they're willing to pay more money. That's an interesting one I like. Another one with CPG, I was trying to mark this morning, and he said if the person where you've stocked your items, if they put in a second order and they like it, it's selling off their shelves, they want to keep it. In the CPG space, that's a nice definition of product market fit. So I don't think there's a right definition. I think everyone has a different interpretation of that, but it's a...
I have, on B2B SaaS, I have a question for you from that definition, Interesting one. Thank you for sharing. That's actually, it's a good perspective to have. If someone likes your product, finds a value, they will renew it without any questions. I don't know much about CPG. But here's the thing. I know some companies that are building products for one company. So essentially, they have built their entire software, custom-built software for that one company. It's practically a dev shop but from the outside, it looks like their product. That one company, they will renew it. And you go around and ask, how many companies are out there? I would argue there are 4 or 5. In my mind, those 4 or 5 companies would use this product looking at an annual ARR of probably around like $300,000, $400,000, but that's it. Is that product market fit?
In that specific situation, I don't think so. But yes, based on what I was saying,
But no, I think I would, again, and I think it has to do with what your expectations are from your company.
100%.
If you want to run a lifestyle company, yes, you got product market fit, great. Someone is paying you, you got the money, it's enough. But if your goals are to build a scalable business, then
makes sense. Going back to your journey, what do you do after Tower Education?
So,
were you still motivated enough to be an entrepreneur and start a 3rd or 4th idea?
Yeah, I think so. I was, but I think I was, okay, I didn't quit soon enough, the Tao education.
Okay.
And I can't yet decide whether it was a good or a bad decision, right? But I did not quit soon enough. It was not going anywhere. No one was paying. We had like $20 a month in revenue. Yeah. But while I was in Chile, and I was working on this startup, and I was passionate about education, teaching people, and all that stuff, I came across another idea. I was teaching people programming, teaching them Ruby on Rails in our co-working space in Chile. And I built a sample app while teaching them. And that became Elephants. And that just blew up without any effort. I didn't do anything. One day I got a message from Heroku that, hey, you've exceeded your free tier limit. I'm like, who is using it? Right, in the Tao education, no one was using it. It was on the same Heroku server, but nothing happened. So yeah, maybe it's good that it worked out. Yeah.
Before we get to that, how do you end up in Chile? What are you doing there? Why are you in Chile?
Yeah, I think I was traveling around and I missed my flight. So I was in Chile and I was like, all right, I'm gonna stay here. 1 week, month, 6 months. Ended up staying there for 5 or 6 years.
Okay.
No, I mean, I think I went there for a little bit, for a few months, just to check it out, do some work. And then I came back because my friends were there. And then the Elephants app, I was teaching them in Chile, right? And there were a couple of my friends that used to do these temporary jobs and events. So I gave it to them, like, hey, use it. The entire platform was Google translated. So I gave it to them. I came back to States. And then I got notification on Heroku that, hey, you have exceeded the limit. And I go in and check database. And there are jobs being placed, people being assigned, people are going and working. So I spoke to my friends and they were like, I was like, let me come back and see if there's some money to be made here. So I bought a one-way ticket, flight back to Chile.
Nice.
Stayed with my friend, went to some companies that were using the product, and they wanted to pay me. So I ended up staying 3 years in Chile.
Does Chile not have any visa requirements?
Not for me.
Okay.
No, I'm a citizen of Chile also. That's
Okay.
why.
I didn't know that. How did that happen?
Accident.
Okay.
No,
but-
creating jobs and all that stuff. They have some things. Yeah.
Okay. So you go, at this point, you have a working app. You have customers who want it. How do you figure out what to do next? Incorporate a company, set up what's your next step? At this point, people are using a free app, right?
Correct.
Yeah.
The Elephants, right?
Yeah.
Yeah. Yeah, I think it was, Chile is quite an amazing country from that perspective. So I have friends, they were a lawyer, and there is a thing called, I don't know how good you guys are with Spanish, but there's a thing called Empresa un día in Chile, which literally means you can launch a company in 1 day.
Okay.
Empresa, company in 1 day.
Okay.
So you can literally go online, just create your ID number, all that stuff, bam, you have a company.
Nice.
So it's pretty like obvious and easy.
Nice.
Mm-hmm.
You would think a country like the US has also solved that problem,
No.
but
Actually, you come from the taxes, the entire government system, you come back to the US, you're like, what is this? I gotta guess how much taxes I owe.
yeah.
Like Chilean systems are incredibly amazing,
Nice.
from everything. Yeah.
You go back, one-way ticket, talk to these companies. How fast are things moving?
So I'll go on a story mode
Yeah.
in that case.
Yeah.
So I go back, and at that time I don't speak any Spanish, right? The entire platform is Google translated. So there's one company, it's called Tomate Producciones, that is using it extensively. So I send them an email, I don't get a response. I knock on their door, literally show up at their office. They don't speak English. So I go back, I hire an intern for like $100 a month. And his job was to translate for me. And I didn't have much money. So he came with me. We go to the company. We show them the product. We are like, this. Okay. They're like, good. How much? I was like, good question. Let me get back to you. And then we go back and we come up with some pricing plan, give it to him, and we start making money.
Nice.
So within 6 months, we had 10, 15 clients. We had about 6,000 workers on the platform, like people who are looking for work. and I was on the verge to close a round. And I was incredibly fortunate to have some of the really best people in Chile. Yeah, I felt really grateful for that group. So all angel investors, they came together. They were like, we're going to fund you. And then after that financing, within about 10 months, there was, Santiago is the biggest city in Chile. About 1/3 of the US, Chilean population lives in Santiago, right? And within next 8 months, there was not a single building address that you can put on the maps where we did not have someone working. Like it was that big.
Nice.
You can put your building address and I'll be like, oh, there are 3 people that live in your building that works on our platform.
Okay.
So it became big. Yeah.
At this, before you raised that angel round, was it just you? Do you have a team at this point, or
No, me.
just you?
Yeah.
You're doing both sales, coding, everything.
We didn't do much sales. We had some companies that were using it through word of mouth. I was coding. Yes, that was a thing. And that actually backfired a little bit, afterwards. And I think I have a story there as well. So I'm an engineer. I build products. And people that came first, they came because they were like, hey, word of mouth. They started using the product. Then I had a board, investors. We now have a lot of workers on the platform. Like every person you can imagine that could work was on our platform. But we didn't have enough clients. So my investors and board of directors were like, hey, Ash, we're going to start selling. I was like, say no more. I got this, So I go back, I create this automated landing pages tool. So it will create like looking for reponedores, which is like warehouse workers, looking for this, all this thing. I created a referral program. I created a promo code, created an automated email campaign. And I go back and they're like, Ash, you're not listening. You're focused on sales. And I'm like, I am focusing on sales. That's all I'm building right now. Took me 2-3 years to realize, oh, they meant I should have called companies and get them on. Yeah, I'm really slow. Yeah.
How do you decide to grow the company? You have the board. You have a lot of traction. You don't really have a two-sided marketplace problem because you already have a ton of folks.
Yeah.
What does the trajectory of the company look like? Are you growing a team? Are you just focused on revenue? Are you?
Yeah. So I think because it was a staffing platform, right? We did a lot of event staffing. At that point, we brought in a local Chilean partner. So I think we raised a second round after that, and then we decided for the second round, we're going to bring in some senior person in Chile to run the operation, someone who speaks Spanish and understands the nuances of the Latin American businesses. So we brought in this guy from IBM, David. He's a great guy. I love working with him. Him and I, we just became like this really good friends.
Power couple.
Yeah. And so he knew the fabric of Chile so well. So he went and closed a lot of deals to a point where like all the big events in Chile ran through our platform,
nice.
Right? If you go to like events like Lollapalooza, there would be elephants booth just for people who coming in, checking in, all that stuff, just for elephants. Like there were elephants crew everywhere.
Nice.
So, and at a peak of elephants in Chile, we had like 1,000 people working in a day, like literally working on a payroll. It was crazy. And then at the same time, so we brought him in, and the idea was I was kind of useless in Chile because I didn't speak much Spanish from a business perspective. So I was like, okay, I'm going to come back to the US and launch in the US. And that's what we did. So we kind of let him run the Chilean operations. We had a decent sized team, not too big. And I started launching in US. And then interesting thing happened. I don't know how helpful this would be for people, but we were hiring thousands of people in Chile. And in New York, it was slow. I started working with restaurants, filling out their staff, some small events. And Chile would do like 100, 150, 1,000 people in a month. In New York, we would do like 40, 50 people in a month. But we would do 3x the revenue of Chile. And it quickly became clear that from a bigger scheme of things, Chile doesn't make much sense from a revenue standpoint, and the profit and everything. To hire one person in the US was a really expensive affair versus Chile was quite easy. So resources started switching to the US more and more. Plus me being in the US made a lot of gravity pulled product and everything. And so, yeah,
Because
and
I think there's a lot of contextual product enhancements you do
exactly.
when you're working for one segment or the other, right? Because people use it differently. They have a different way of day to day. So it's gonna go one way or the other.
Yeah,
It's very hard to take a product from one economy to another if the economies don't operate very similarly.
very well said. How do people figure those things out? Like when you start, our assumptions are like, oh, well, it's the same thing. We do temporary staffing. How different could it be?
I think it's so like I had a Nigerian founder on. One thing he said was he realized that Nigeria tracks the Indian and Vietnamese economy but lags 5 6 years 7 years, and he found that insight. I don't know whether it was a report or it was just looking at things and it just made sense, but he had that insight. And so he launched Jobberman, which is Nigeria's largest job board. They sold to Sequoia, Tiger, blah blah. But he's like, I realized that we're tracking Indian Vietnamese economy, so I just started studying what's happening there. Oh, like Naukri.com was picking up. All these things were picking up in India. Like, oh, it's I have a hunch. I'm making a bet
Yeah.
that that's going to happen here. And so I think it's just perspective. And for example, at Indeed, I think the reason Indeed went to Japan, Germany, and they're bigger in some states, from an SEO and organic traffic perspective, these economies operate very similar to the US. But India doesn't operate, it's not like a SEO based economy. So India, Indeed, I don't think had as much penetration because their whole platform was built on this concept of organic traffic SEO. So I don't think that answered your question, but I think it's just analogies of understanding how an economy works. But I would say it's a hunch that people then
Yeah.
backfill the story of like, hey, here's why this, right? So
That's so true. I read this book, Alchemy, by Rory Sutherfield. I don't know if you read it.
no.
He makes this point, which is really cool. He's like, you don't come to a creative solutions by logic or reasoning. Once you come to a creative solution, you use logic and reasoning to justify
Yeah.
the solution.
Yeah.
But that's not how it's come. And we can look back at history or all the big, this eureka moment solutions. Yeah, they didn't follow the logical steps, The Petri dish, it wasn't a logical step that they followed to come to a solution. And still the corporate companies, we use logical steps to come to a solution. But the eureka moments lie outside of
100%.
that.
100%. So you're in the States, you realize that it's a different economy, different product. What do you do now?
Yeah, we started scaling it. And then at the same time, realizing that more and more companies similar to us were coming to the market. We were competing with temporary staffing firms in hospitality space. And they were all either building their own or new startups were coming up. And I had this conundrum, like, how do I compete with these companies? And, I think if a market is likely, the whole question was, I was really inspired by 0 to 1, Peter Thiel's book about monopoly. And if you cannot build a monopoly, the chances of you building a massive business is really low, right? And staffing industry is a perfect competition. There are like 25,000 staffing companies with 150,000 offices in US alone. So for me to kind of think like, okay, I can break that and just build a monopoly, I was like, that's less likely going to happen. Technology makes it efficient, but it's still a staffing operation. So we launched in Miami. I had to open an office in Miami. San Francisco, I had to do the same thing. So I was kind of struck with this idea that I think if I continue running this company, I might be another staffing company, just software powered. Maybe I have a slightly bigger gross margin, but it's still a staffing business. So I was a little bit disheartened and wasn't sure what to do next. And then I had an opportunity to sell the company to a Chilean company, and I did that.
Okay. And at that point, are they still operating in the US or?
No, they shut it down.
Okay, they're just doing Chile.
Chile, yeah.
Nice.
They're one of the largest on-demand staffing platform in Chile now.
Nice.
Yeah.
What do you do after you exit? Do you trip, buy a car? What do you?
No, nothing actually. So pandemic came right after that. So I traveled a little bit, but I didn't do much, which is great because I had a great time during pandemic. But when I was in Chile for the first time, when I didn't speak any Spanish, And we go to this first company, Tomate Producciones. And I was showing him the product. He said something. He's like, I like your product a lot. I want to use it. But can you charge me a monthly subscription like Spotify instead of charging me per worker and taking a margin from that? I was like, no, I'm not doing that. And then he's like, I want to brand it with Tomate, their brand. So after I sold the company, it's like, maybe there was something there. There are a lot of staffing companies. They all want to launch their own platform. So I started tinkering around with the technical idea that can I build a system that can be fully white labeled and every staffing company can get their own platform. So that's what I did after.
Nice.
Yeah.
It's funny you say that. Guest I had on a couple of weeks ago. A friend from UT, he's doing agricultural drones. They spent 2 years. They were doing a lot of autonomous drones, not working. They did photo stuff, this, telemetry, whatever, right? And there's one farmer who said, you should do this for spraying pesticides. They didn't listen to him. But nothing worked out, and they're like, let's give it another shot. And they remembered that farmer saying, should do pesticides. Called him. I think they went to Peru. I don't remember where. I think they went to Peru or Venezuela, one of these places. And they're just working with this farmer. They retrofitted their drone, and now they're spraying pesticides for this guy. And they became a service operator for that, making like $100 a week. Not significant, but it was validation.
Yeah.
And then just went off that one prompt of one person who's like, maybe you should do this. And now they're doing like 9-10 million a year. They're selling a drone a day. But whatever realization, let me listen to that guy.
Yeah.
But it's interesting how those things or those perspectives come up that you just shrug off because you think you know better, right? But
exactly. And I'm surprised. It has happened so many times in my life now. It takes me a few years to realize some good ideas.
Nice. So you're tinkering around. What's next? How do you go from 0 to 1? How do you take that white blank canvas that you have in?
Yeah. If you didn't notice the pattern yet, there is a pattern here. So I figured out a multi-tenancy issue. I'm like, all right, started reaching out to did some email marketing to client, tried to sell them, and I fell flat on the face again.
Yeah.
Because turns out, I thought I knew what a labor marketplace is. I was like, I've built it before. I've scaled it. I know the exact.
Out of it. This is my thing.
Oh, this is my thing. And I'm like, I know it. So I go to the staffing companies. I have hired the engineers. We have built a lot. I hired a lot of expensive, really smart engineers. Build this amazing product. I go to sell them. They are like, no. Turns out, if staffing business is operating in any business operates in one manner, right? And if you want to kind of help them get up to a certain level, they can't just jump from 0 to 100. You gotta take them from 0 to 5, 10, 15, 20.
Yeah.
And I just didn't realize that. I was like, and I was really mad, angry at the staffing. And I'm like, what you talking about? Why do you need that? Example, when I built the labor marketplace before, I built platform for candidates and for clients. But everything else, I could do SQL query and figure out what's going on. Staffing companies were like, no, we want to see it, what's happening. So they needed a dashboard. And then we knew the algorithm that were used to reach out to candidates. They were like, nope, we want to see who is being reached out. Why are they being reached out? And they want to know everything. And there were a lot of such small things which we realized that they are just not comfortable kind of delegating it to a black box, right? They want to know, they want to be in charge, they want to be in control. And so I had to scrap that product, most of it actually, and rebuild the product from scratch with the perspective of I'm going to meet you where you are and we're going to go from there together. Yeah.
And I think when you look at traditional businesses, similar to this, if it's not a tech first business who's been iterating, optimizing with tech workflows, they know a certain way to operate. And if you want to go change that, it's a, like you said, it's a large onboarding curve to switch your whole workflow, because outside of the workflow, there's training, there's time that's gone into someone knowing how to use the system. They can't just go to what you're saying, even though it's better, even though it's going to save them time, money, whatever. It's hard for them to accept that change, right? And if it's not a tech first company, in my experience, it's been harder to convince them to grow from A to B. Take one part of the workflow, change it. Okay, I added this. Okay, I added this, and it's always harder to convince.
You know, you're an engineer as well, and I think as you start growing the company, and we are still a really tiny company, but what you learn more and more the importance of the human behavioral psychology and all that stuff, like how critical it is. When you start a company, you're a startup, you're with your friends building a software, you don't think about those things. You're like, yeah, this thing does one thing and it's great. Yeah. But
I feel like I think the naivety is also good, but you also then assume and project a lot onto your potential customers. I think a lot of the times when a founder comes to me saying, hey, I want to build this XYZ, like, why? Like, I know they need this. I'm like, okay, like, who told you they're going to buy this, right? And it's just this assumption of, it's a good solution to a good problem, but no one's told you that they want to pay for it. No one's told you that this is the solution I want. And you just make all your decisions assuming that, oh, I know this is the right solution. And until you realize that, hey, no one wants this, or I got to figure out an entry, it's just an assumption that you are not willing to disprove.
yeah.
But were you disheartened at this point when you realized you spent so much time, money, effort, dev time into building this product? What was the turning point where you realized, okay, this is not exactly what is needed? And why did you decide to scrap versus pivot or modify? Or
And there are also some foundational differences between how staffing companies work. So I think one, I had a really good friend in New York. He ran a big staffing company. And so I was working with him kind of and I got a much deeper insight into his business. And I realized they have a lot of processes built in. And I was like, if I was Jim and I had to change the processes, how would I do it? And I was like, yeah, there's no clear answer. You make this change, you're impacting $40 million worth of business. Am I willing to take that chance? Absolutely not, right? And so the whole idea became, instead of like, because I had a 0 and then 100 product, and I had to build 5, 10, 15. What it means is like the lot of steps that I skipped, which machines would do, I had to build for humans to do it, and then give them an option, a convention that they can follow, and then automate it. So now a platform is, I was disheartened, to answer a question, but it was the first time I felt, in a long time, I had felt good that I made a mistake, and I know I made a mistake, and I can correct it, and it's not too late. So that was good. Yeah.
just to add on to your analogy, I was talking to someone who works a lot in the restaurant space the other day, and they mentioned that they do a lot of sourcing optimization. So like, oh, hey, you order 100 kilos of tomatoes a year. Let me get you a better price from this vendor. And he's like, every restaurant operator I go to, a lot of them are very hesitant to change. Even if I'm saving them 7 to 10% on their acquisition cost of whatever raw materials, most of them say no, because it is a change to their fundamental workflow that they don't want to deal with. It's a different vendor, maybe he comes at a different time, maybe he brings in a different kind of crate. Like, I don't like, this is costing me an extra $500,000, but it's what I know, it's what I'm comfortable with.
Yeah.
And again, in my mind, it's just, why would you not want to save that 10%? It's the same thing, it's a better product, but it's just, they just don't want to change habit.
Yeah.
And I think that's a big barrier for a lot of SaaS companies is, if you're fundamentally changing a behavior, it becomes very hard to convert the sale, because why would someone take a risk? Why would you affect the $40 million business if you don't need to, right?
Sure. Yeah.
So that's an interesting take. You realized you made a mistake, you're on the right path. What's your next step? How do you
Just kind of hunker down, start coding again, slowly but surely, work extremely close with the customer. I stopped fighting back too much. I stopped like, that's not a good way to do it. I'll teach you how. Like, no. Okay, you're doing it that way. Explain me why, what happened? What made, like, why did you come up with this process? Many times I will find out the reasons. Sometimes I would not, but I'll accept it that, okay, that's the process. And if it's happening that way for a while, it's okay. Let's accommodate that process for now. So started building a product, working with few customers, and then adding more customers, bigger customers. Yeah. So.
And at what MRR did you decide to raise a round?
15,000 in MRR.
Why raise the round to scale, build a team, or like why did you raise the initial round?
There are two answers to that question. One is why I actually raised, and what I tell people I raised for are two different things. Why you do things and then you justify doing things are two different answers, right? So actually, I wanted to build a company I had a little bit like sour experience the last time I worked with venture capitalists. And so I was kind of trying to avoid that as much as possible. I was like, I have capital, but I was running low on capital, number one. Number two, I realized that I was not sure if there's a market for the product I was building. A lot of things were up in the air. Like my number one hypothesis was that temporary staffing companies would switch to a platform model. I'm like, is that real? Will that happen or not? I wasn't sure. Maybe no one would adopt this platform and staffing industry would remain the same. If they would adopt, are we going to have few companies that would own this market, or would it be like fragmented, right? And if it remains fragmented, now I have a shot. If it remains fragmented, can I build a product or not? So there are a lot of unknowns, right? So I wanted to de-risk myself to kind of stop investing personal capital. So I started raising capital. I failed really bad. I thought I knew how to fundraise. I don't. So we ended up joining TechStars. I go to TechStars thinking, I have built a company before. I know how to do this thing. What are you going to teach me? Turns out they can teach you a lot. I learned a lot.
You in TechStars New York?
No, anywhere. San Diego.
Okay.
Yeah. Man, it was just a humbling experience. I think TechStars and coaching, all these things. The way I think about TechStars or any other accelerator program, a good one is that it's a coaching, right? And the thing about coaching is that they tell you about things you don't know, and it's really hard to remedy things you don't know you're doing wrong.
Yeah.
So it was a great experience. They just they changed our trajectory from going like this to going like this. That was amazing.
At this point, is it just you? Do you have a team? How big is the team?
I think it's me and my co-founder and like two more friends of mine that we're working together. One front-end engineer, I'm the back end. Eve does everything, and then Derek, he was doing sales.
Nice.
Yeah, so four of us.
What was the in TechStars you did before COVID, after COVID?
During.
So was it in person or virtual?
It was a little bit in mix. Yeah,
Okay.
it was half of we had like 1 month in person and 2 months remote. Yeah.
Because the reason I ask is my take on accelerators. I've never been through one, so it's second-hand experience.
Yeah.
But I feel like a lot of the benefit of an accelerator is the in-person collaboration, the being with your mentors. It's the having those offhand discussions. Personally, I feel like those probably help guide a lot of decisions more than, oh, hey, a mentor's going to sit with you for an hour one-on-one. It's probably the offhand things you learn and see and hear throughout that add a lot of value. I could be very wrong, but I think in-person was always a little bit. So was that a good experience, the virtual and mix of in-person, or?
Let's talk about the thing that you said.
Yeah.
What's the value of an accelerator program? I think just like going to a church, you get a community, and it feels good.
Yeah.
You're going to an accelerator program and you meet your community of other founders pretty much at the same stage as you are, meet some mentors that you can learn from. Sure, there's a value to that. You know. There's a capital value, sure. I think the biggest value in my view, and came across many founders going through TechStars. I've tried to help them as much as I can. I wrote a lot of content on going through TechStars. There are a few things that determine the value, right? One is the stage. If you're too early, you don't have much built out, you can't take in people's help, right? So you have all these mentors from different areas that can help you a lot, but you have some really foundational things missing.
Yeah.
So I think too early, not good. You might not be able to kind of get so much value from the program. Number two, and I think which is the most important thing, and I started by saying this thing, when I went to TechStars, I had this thing, what are you going to teach me? I already know a lot. I sold my last company, I quickly humbled myself. Like when they started doing presentations and talking about things, I'm like, oh, I didn't know this thing. I didn't know this thing. Within the first 3 days that we spent together, I had a change in mindset. I'm like, oh, I'm a student. I need to learn a lot. There's a lot of things that I don't know. And that allowed me to get a lot from the program. And I meet so many founders going through TechStars. They feel like they know things. And if you have that mindset, you can't get value out of it. I would proactively reach out to mentors, reach out to like managing director that, hey, I'm doing this thing. Am I doing it right? And then I'll get this small kind of nudges a little bit here and there that just put us in the right direction. You don't want to see the pitch we had before TechStars. It was really bad. Yeah.
Maybe we should, add it over here as a
Yeah.
blooper. No, I agree with all of that.
Yeah.
I think I meet a lot of founders who shrug off accelerators, saying, "Oh, it's too expensive. 120K for 7%, 200K for 9, whatever, right? Whatever the terms are." And in my mind, I'm like, you have zero MRR right now. You have one potential customer. You have half a product. I would rather recommend you take the accelerator. You learn, like you're saying, because again, you learn things about GTM, customer acquisition, marketing channels. There's so much that goes into building a product that you assume you know. Like you said, it's just, it feels like, oh, like, yeah, I'll get a user and they'll sign up and they'll pay. But there's so much that goes into every skill set in this funnel of building a product, deploying a product, getting someone, a sales funnel, a marketing funnel. What is customer acquisition? Okay, is my pricing model correct? Am I actually going to make money if I spend $100 to get a customer, but they're only paying me 50? Like, you don't think about these things until they're put in front of you.
Can I say something?
Yeah.
I have a theory on successful startups,
Yeah.
And it comes from a pretty unexpected place. It comes from Einstein.
Okay.
I don't know if you read his book from Wolf.xyz. It's a really good book you can read. This is my theory. And I think TechStars and accelerator programs are a big piece of this, right? That all the things you're talking about that you can learn, the pricing, this, that, they're all fine. They're important, right? The coachability, the humility. I think there's a way to the way it transforms into something so powerful that you could have this much impact or you could have like a massive monumental impact, right? And this is what makes a difference in my view. Theory could be wrong, probably wrong, but here it goes. I think how many people are kind of rooting for you to be successful, right? At any point of time. I think that number and that how intensity of people wanting you to be successful makes a huge difference. And I think if you going through TechStars and if you do things right, I came out of it and I knew there were like at least, a lot of the mentors. We met 80 mentors, the entire TechStars program team, my other peers, they all wanted me to be successful. I knew, and I wanted them to be successful, but I knew there was a huge group of people behind the scene. They wanted me to help me be successful. I would be working on engineering something. They are thinking about, oh, how can we help Ash get some customers, Or oh, I know he's struggling with this thing. Do we have someone that we can recommend him for hiring? So, and I think that makes a big difference in life. And to achieve that thing, one of the skill is how do you enable others to help you? I think that's a skill that no one teaches you. And it's really hard to learn because you meet people and people are from different industries, different vertical, different functional areas, expertise. And you have to enable them to help you, and you can't just go with one thing like, hey, this is my business, this is what I need. But once you figure out understanding people's strength and then allowing them to help you, makes a huge difference.
It's a random analogy.
Yeah.
You said when people are rooting for you. I don't know. I was fifth grade, sixth grade or something. I used to play tennis. I was in a tournament and I was winning my match because the kids I used to go to tennis classes were rooting for me. And then they went off somewhere. There was lunch or food or whatever. And then I was winning. It was a game till 9 games, a set of 9 games. I was winning like 8-1 or 8-2. And I lost after they left. After they left, I couldn't win a single match. And I don't know what it was. It was just oh, there's someone like watching me play and they're rooting for me when I win a point or some shit. And after they left, I just I couldn't win a game after that. And I was very disheartened. But I think to your point, when there's someone in your corner,
Yeah.
it's an extra motivation for you to not quit, for you to, go that extra step, go the extra mile, try one more thing that didn't work, because you don't want to let them down subconsciously, I think. So
Also, like sometimes you stumble and they are there to catch you, right?
Yeah,
They're like,
yeah.
I got you.
yeah. But no, very random thought that popped up in my head when you said that. No, that's cool. You went to TechStars, learned a lot,
Yeah.
refined your pitch deck.
Yeah.
Are you growing in this process, or are you just hunkered down on fixing stuff, or is your MRR also growing?
Yeah, I think MRR also was growing a lot. Coming out of TechStars, I mean, I'm grateful for an incredible team of people, like really hardworking, and they knew that we are going through TechStars. When we come out, we'll be fundraising. We gotta show that upward curve. So we were like working extra hard, cold calling, reaching out to customers, signing contracts. Yeah, so we're growing a lot, definitely.
Now you mentioned VC money.
Yeah.
I would not consider TechStars VC money, because it's, in my point of view, not as like, hey, grow fast. To me, IRR, right?
That's true.
Why raise versus why try to be bootstrap and profitable? Do you want to raise? Do you want to become a $1 billion company? That's why you want to hyper grow, or you've done this before, you've seen the growth, you've exited. Is there not a model where you can grow at the pace you're growing and still be profitable?
I have a theory on this. I think there are 3 types of companies. One, I think what you want is a different thing. A lot of the entrepreneurs are driven by optics. They are like, I see you start a company, you raise capital, and that's how you're successful. Yeah. They go and raise. Different story. But from a business perspective, there are 3 types of businesses. One, you can never raise capital, right? They're usually like, small market, highly fragmented, not strong value add, not like scalable business. You cannot raise venture capital for those kind of business. Then the second type of business, which is, I would say the third type of business, which is you must raise venture capital. You cannot build a business without venture capital. Example, Uber. You figured out it's a $1 trillion market. To kind of build a massive business, you need a lot of capital, right? You cannot build Uber or that category of business without raising venture capital. So those are third type of business which you need venture capital for. And the second type is you can run a lifestyle business, but having a venture capital might make you grow faster, capture more market, all that stuff. I think from our perspective, we knew that I think the market was big, which means we knew like if we prove this thing works, there are some sharks that would come and they would try to take our market, and we can't defend it with the muscle that we have. This is again a kind of a sub theory, which is that we had a shot. We were the first mover in this space, and we still think we have a shot at building, kind of defining this category and then owning the category, right? To do that, we have to invest a lot of capital, which I just didn't have. So I was like, I want to take that shot and see if I can make it happen.
Makes sense. I like how you broke it down. And the reason I asked is I feel like a lot of founders, like you said, get stuck behind optics.
Yeah.
Because those are the stories you hear. You hear the raise 10 mil, sold for 100. Like those are the things you hear. You don't hear about, the guy making 600K a year, cash flow positive business. Personally, that might be the right thing for someone to do. That's more than enough money for you to live a really good life, right? But it's not a unicorn. It doesn't get you the headlines. It doesn't.
Looking back, I think that's definitely a way better kind of approach to go. I know staffing companies. I have venture-backed founders, their companies are worth like $200 million, and they're doing great. They have a good salary. And you contrast that with a staffing agency owner. The staffing agency owner is like living like a king. He has like cash in his bank. Like the founder is rich on paper.
Yeah.
You don't have any liquidity,
Yeah.
And until that one day, you are pretty much, broke, or you are like a corporate employee, right? But I think running a small but a profitable business is actually much better.
And even even the paper liquidity, even the paper money, you could have paper money, but if you don't make the right moves, if you raise too much, if you sign the wrong term sheets, you could make nothing at the end of the day. On a liquidation event, maybe it never gets to your common shares because you signed 4x preference, 3x preference, whatever, right? Because when you're in the notion of it and someone's handing you a check with a bad term sheet, and if you're desperate for the check, you sign whatever you need, right? And I feel like that people don't talk about that enough. People don't highlight those are potential outcomes. If you're willing to try and if you're in it for the journey and you like building a company, that's fine, do it, because you're going to probably figure it out. But if you're expecting that $20 million paycheck on a liquidation event, that's probably 1 in 10 chance, 1 in 10. But no, I agree. I've met so many small business owners. I had someone on the podcast the other day. He runs a security company, he runs a valet company. Combined, they're doing 15 million a year in revenue. I'm like, he's balling.
Yeah,
He's
great.
killing.
Yeah.
And I'm like, that's good. I mean, he's enjoying life. He doesn't care about SaaS. He doesn't care about tech. He's finding ways to grow his business.
The SaaS companies are trying to sell to him.
Exactly. Yeah. It's funny. He's actually building out a SaaS learning L&D portion of his business. But I feel like if you know those exist, you know that's an option, you can make that decision.
True.
But
Yeah.
if you were to start another thing, would you do VC backed, bootstrapped, or would it depend on the kind of business?
Something one, I want to build a massive business. That's the game, right? If I have my own capital, I would probably not want to take outside capital, but I would keep the ownership, right?
Yeah.
But to build massive businesses, you need a large amount of
Money,
capital for the most part, right? This is what bootstrapping is, I think, and there's a lot of like glorification of bootstrap and hating on the VC. And I want to kind of tip the balance a little bit. What you're doing by bootstrapping is essentially, I think in our lives, we got like, if you're a founder, you got like 5 or 6 swings in your life, right? That you can take at this thing. When you bootstrap a company, you're essentially saying, I'm going to sell my time for a swing. And when you take the venture capital money, you're saying, okay, let's risk this together. You're putting in the capital, which is really expensive. I'm putting in my time. We're going to go at this really, really fast. You're going to coach me, help me. You have done this many different times, venture capitalists, right? So they can guide you. They can help you with all the resources you need. But let's go at this really fast and see if there's something here or not. It allows you to take more swings faster. But if your goal is that I want to build a lifestyle business, right? And I just want to have enough good life, yeah, do bootstrap, But if you want to do something big, I think raising venture capital is a no-brainer.
Yeah, I 100% agree with that. And the only thing I would add is, as a founder, know what you want, right? Don't raise VC money just so you can try out an idea at your own pace, right? Be very aware of what you're trying to do and what you need the cash for, and either do it fast or fail fast.
Correct.
Because that's what both sides want, right? I think a lot of people are stuck in the middle. Like, I want the cash because it's secure. I don't have to spend my own money. I want a paycheck. I don't want to burn. Like, people are stuck in between, and it doesn't help either side.
Yeah, I think those are outliers. I feel like if you work with a good reputed venture capitalist, they are usually savvy to help you educate before they work with you. It's those kind of new first fund venture capitalists that you might be in trouble with. But otherwise, I think most of them know to educate you before you get in the bed with them.
100%.
Yeah.
You just raised a seed round. Are you on a growth phase? What do you want to do with the...
Well, I changed my title. I'm no longer the CEO. I'm the recruiter.
Okay.
So that's what I'm doing full time now, hiring. I think I don't think we are still at the growth phase.
Okay.
We're not at a point where we are like, okay, the machine is working. We have strong metrics to kind of just rinse and repeat. That's the goal with this round. To kind of have, we do have sales and marketing and product machine working fine, but I think there are some areas like implementation, we are still figuring it out.
Nice.
So I'm hoping we'll have that done by end of this year. And by next year, we'll have a proper playbook for all the 3 verticals, right?
Nice.
What it takes to market, get a lead, what it takes to sell, close a deal, what it takes to implement and deliver value, right? And then
at that point, you just need fuel.
That's when the growth comes in. That's what the next round would be. But to achieve those things, I feel the most important aspect is also like the team. So right now I'm just hiring, and I'm learning a lot about hiring. If you would have asked me 5 years ago, Ash, do you know how to hire people? I'm like, yeah, of course. Now I'm learning. No, there's a lot I don't know. Yeah,
100%.
it's huge. Yeah.
I think the one thing that I've been listening a lot, hearing a lot of people, reading a lot of books, is making sure incentive structures are aligned correctly. Because when you hire someone, at the core of it, they are an employee, and they have no reason to go out of their way to perform and like deliver, right? But I think with the right balance of values plus incentive structures, you can supercharge a team, a person, an individual to go out of their way and deliver. I don't know what the right incentive structures are, but I've just been thinking about that thought of like, how would I define this role? How would I incentivize this role? How would I make sure everybody wins, right? Like if there's upside for you, there should be upside for me as well. Like it should be counterbalance. But I don't know what the right answer is, but
I think they say some. I think incentive structure, in my view, is an optimization process. It's not a blank canvas, let's create something process. It's not the table stakes, I think from my experience right now, the table stakes that we are looking at right now is one stage experience. Has this person taken a company from seed to series A, B, C, And we don't you want to hire marketing or like product manager, right? A product manager who has worked at public companies or late stage companies, it's quite different than a product manager who has taken a company from early stages, founding time, to series A, B, C, because they know what that chaos entails and how to kind of
100%.
streamline this process. I'm not used to having a mic in front of me. So I think stage is a great fit. The second thing we are trying to figure out now, which if someone knows the answer, I want to know. You see someone's profile and you're like, oh, this person worked at a company from seed stage to series B. They were the product manager, or they were like marketing manager, right? At this company, at this place, and this company has great marketing. Were they the catalyst for making all that amazing things happen at that company, or
were they executing?
Or were they just kind of there for the ride, right? Now, everyone shares the credit of that successful outcome of that company that they worked at. Yeah. But I think when you hire, you're like, I want to find out, did you actually instigate those things? Did you start those things? Did you actually the key person making those things happen? And I call this kind of, there's a popular phrase for this, jazz versus classical. Classical players are trained at repeating the same music again and again, right?
Okay.
You give them a tune, they will master that tune and deliver amazingly. Jazz players are really good at creating something from scratch.
Okay.
So at this stage of our company, we need someone who are a jazz player. They have nothing. You got to create from scratch. You can't come in and expect to have a process in place. So I think we are trying to kind of figure those things out. Like, how do you evaluate those things? Anyways, there's a lot of things there in hiring.
I had a train of thought. I lost it. One thing I was going to ask you is, why choose Wolf.xyz? And the reason in my perspective, XYZ domains were very heavily crypto token related.
Oh, correct.
And you spent 5 figures on the domain as well.
I did.
What was the reasoning behind that?
We have this vision for decentralized. No, I'm kidding.
You just like it?
No. Because Wolf.com starting bid was $6 million.
Okay.
Yeah, and I was like, no, I'm not paying that much money. Yeah. So.
But Wolf you liked. You wanted to keep Wolf.
The company's name was Wolf.
Okay.
Yeah, and we had a fromwolf.com domain before, and so we go to companies and they would call us, oh, you're from Wolf. From Wolf is here. And I'm like, that's not the name. That's the domain name. The company is Wolf. So we had to change the domain name. I was like, I'll buy Wolf.xyz.
Nice.
But our investor now, when he introduces us to someone, he's like, meet Ash, founder of Wolf.xyz, in parenthesis, not a crypto company. It's a standard.
I mean, it's a good way to stand out. It's a good way to, be remembered. Oh, you're that company. So that's cool. Yeah. One quick question. What's the difference in startup environments from you've been in New York, you're currently in Austin, and you've been in Chile? What's the difference in the startup ecosystems in all three, and what stands out where?
There's just a lot more happening in New York, right? A lot more people that have been there, done that, a lot of capital. People are audacious, right? And whether you are successful or not, but they want to try these big things. Every other person you would meet is inspiring in some ways.
And super dense too.
Yeah. Also, yeah, and also it makes you feel bad a lot. Like I was stressed because every time I would go around, I'm like, I am doing nothing. I am no one, I'm a loser. Because everyone is doing so many amazing things around you. So it works positively for me, at least, because it drives me. I'm like, I go home, like, let's go, let's do something, let's build it, let's catch up. At the same time, so that's New York, incredibly smart people from all walks of life. You can pick an industry like classical music, finance, investment. You can name an industry and you have incredibly smart people there. Austin has a less diversified
100%.
talent pool. But Austin people are incredibly more helpful. So it's small, but really helpful group of people. Chile, it's a tight and strongly government influenced ecosystem.
Okay.
So you have like a lot of support from government that you can't even fathom here. Yeah. Government will literally give you finance and give you money to start a business.
Okay.
And there are a lot of other such things. Like if you raise capital from outside of the country, they would match it.
Okay.
Yeah. So, and then of course, people are just kind of really helpful. Yeah.
Nice. I like it. I do a bunch of rapid fire questions at the end, and then I'll ask you a question from my last guest. What are 3 resources that you'd recommend to folks listening?
Listening?
Yeah. No, for whoever's listening.
Oh, okay.
3 resources.
I think
Books, podcasts, whatever you want.
Correct. So I'm a big books guy, The book that made the most impact on my life was Thinking Fast and Slow. It teaches you how to think about the world. Anti-Fragile by Nassim Taleb. Actually, the Wolf business came because of Anti-Fragile's approach, that if something is fragmented, you want to go a layer below it.
Okay.
And last, these books are all going to be similar, but Behave is a great book about human psychology, how people behave and why they behave this way.
Okay.
Yeah.
Nice.
Yeah.
What's your startup tech stack? How do you run your company day to day? Like go top down, all the tools you use.
We use something from an engineering side. We use GitHub. That's the main tool. We GitHub projects for the Kanban structure, GitHub for CI/CD deployment, source code. We run pipelines on AWS. So code pipelines on AWS, which then deploys to Beanstalk, and a separate instance for ECS. The databases we use is RDS, SQL, which is, we are moving away from it. Most of it is now in DynamoDB, NoSQL. We have a serverless application, which is on AWS again, AWS SAM, all the Lambda functions. So high kind of frequency, volume kind of functions are all on serverless. I think there are a few more things I can't remember.
And then what about sales, automation?
Exactly, yeah. So I think Notion is a big thing. Everything our company lives in Notion. Slack, we all use Slack, of course, needless to say that. Notion, Slack, and that's it. Yeah, we don't use...
Slack's introducing their own project management.
No. Okay.
Yeah, I think it should be. It's like A/B testing launching right now, but the sort of like inbuilt to Slack to-do list tasks. And everything.
Slack also has Slack AI. I was like, no, thank you, not now. It's too expensive.
Yeah. So I do this segment where I'll ask you a last question.
Yeah.
So I asked a previous guest to give me a question, and then I'll ask you to give me a question for the next guest. So your question is, what's a failure that pushed you to move forward?
That's a great question, man. That's a failure that pushed me. I think I don't have a good answer, but I'm going to give you an answer on this. Every single failure has helped me to push forward. My Wi-Fi network and something that I live by is resilience. That, you can knock me down and that's fine, but I'll get back up, right? And so I have so far never not gotten back up, which is good or bad. In some cases, I'm like, I should have stayed down, like some of the earlier companies. But I think for the most part, I have gotten back up, and every time I get back up, I feel like, oh, I'm in a better place now.
Nice.
So all failures, I think, have helped in different ways. Yeah.
Nice.
Yeah.
What's your question for my next guest? It can be anything.
Yeah.
Like there's no...
What's something most interesting you have learned recently? Most surprising thing you learned recently?
Do you have an answer?
Now I want to hear your answer.
Most surprising thing recently, I met this guy on the walk. There's this thing called EDI, Electronic Data Interchange. Apparently, most healthcare manufacturing companies have been working on this for the last 30, 40 years and it still exists. It's like a super rigid data format protocol. You can't make any errors. If you make an error, it just doesn't work. And so this company is trying to API-fy it, JSON-ify it. I'm like, I didn't know this was a thing. I didn't know companies are still using this because they have hardware from 30 years ago that accepts EDI. That's just a random fact that
IRS uses the machine's old mainframe. I don't know if you know that.
Okay, no, I didn't know. Okay, interesting. Sweet. No, but thank you for coming on. Where can folks find you? What do we plug? What do we link? Where do people send their resumes?
Yeah, at Wolf.xyz, simple.
And we'll link everything in the description. But if you want to plug anything, let me know.
We are hiring for product managers, engineers, implementation, sales, and marketing. If you have B2B SaaS experience, would love to talk. Yeah.
Okay. Sweet. And I'll get a referral fee for.
Of course, yeah.
Sweet. No, but thanks. Thanks for coming on.
Thanks a lot for having me.